right, question number 27, okay? Your tracking method is perpetual, okay? So then on June 1st, you made a purchase of 100 coffee mugs for $2.35 each, and the freight cost you $100. And you purchased this on an account, okay? So how are you going to record this right here, okay? How are you going to record this transaction?
So it's a purchase. Oh, what it says.
We're using perpetual inventory.
Okay. Cool.
Well,
Is it inventory and accounts payable?
inventory, but in this case, what was my specific item that I bought?
Coffee mug.
Coffee mugs. So in this case, you could do mugs, coffee mugs. Now in this case, if you say inventory, I will accept that as well. Okay. But in this case, again, it's straightforward. Okay. So coffee mugs, and what is going to be my credit account?
It's on account.
Accounts payable, right? Because we owe a vendor on an account. So in this case, what's going to be my total debits here?
335.
335, right? In this case, everything's going to go into inventory. So my purchase price is going to go in there. So is my freight. And your total amount that you're going to have here is $335. Okay. So 100 times $2.35 gives you 235 plus 100, 335. Okay. Good. So then question number 28 says, okay, on June 7th, you received your coffee mugs and found that two of them were broken, okay, were cracked. And you requested a refund from your vendor, okay? So how are you going to record this transaction?
You're gonna debit accounts payable for 470 and credit mugs for 470.
Okay, so again, this is assuming that all of these questions are related. Okay, so coffee mugs, okay, and you're returning two for $4. What was it? What did you say, Erica? $4 and
70 cents.
70 cents. Okay, why? Because each cup costs you $2.35, right? You can't include freight on this one. So in this case, 235 times 2 gives you $4.70. Okay, so again, assuming that these questions are all related. Okay. All right, question number 29. Okay, then on June 8th, okay, you sold 25 coffee mugs for $10 each. If it cost you $3.37 each, okay, assume there's no sales tax. So all sales were made with cash. Okay, so here's a few things that we have: cash sales, no sales tax. All right, so how am I going to journalize the sale of me selling 25 coffee mugs?
Sales and cash.
Okay, does sales goes first or does cash go first?
The cash.
Cash goes first because we're increasing our asset, right? Sales goes second or is a credit because sales, we're increasing our sales, which is a revenue, which is normally increased with a credit. So in this case, right, what is my total cash sales?
Would it be 25 times 250?
Two
Two,
hundred and $50. Oh,
what was that?
I got 84.25.
84.25.
Oh, it's sales. Okay, got it. because I calculated 337, not
Okay.
10.
Okay, so in this case, 25 times 10 should be 250, I think. Yes? Okay. And then now, since this is all connected to one, if this is perpetual inventory, what else do I need to include?
Cost of goods sold and
Good. So Erica, you were on the right line, just not in the right account. Right
inventory.
idea, but not in the right account. So in this case, we need to
Mugs,
calculate. What was that, Nathan? What's my total?
Coffee mug.
Oh, that's right. Inventory, coffee mugs. Okay, so in this case, what's my total amount? If each coffee cup cost me $3.37,
Very good calculation.
84.25.
84.25. Okay. Good. Okay.
So, do we have to assume those two questions are related?
In this case, just because they're all tied under the chapter 7. Next time or not next time, I guess. For future classes, I'll put a little thing that says questions this and this and this are related. So in this case, this is a continuation. So question 27 is related to 28 and 29. Okay, so in this case, yes.
Okay.
But in the actual exam, I'll be very specific. I'll say use this information to answer the next 2 questions or next 3 questions.
Can you go up to question 28 for just a quick second, please? Okay, thank you. I'm good, thank you.
All right. So here, right, this is what we practiced yesterday as well. When we're dealing with perpetual type of inventory, right? When we record a sale, the sale must happen first in order for you to update your inventory. But in this case, right, when we're dealing with perpetual inventory, you are required to have 2 journal entries. One to record the transaction at hand, which is the sales, and then 2, the journal to represent what you sold. Okay, so updating your inventory, representing that you sold X amount of coffee mugs and taking it out of your inventory. Okay. Good. Question 30 says on June 10, okay, a customer returns 2 of those coffee mugs for a full refund, okay? And you sold each coffee mug for $10 each, and it cost you $3.37 each. Record this transaction. So again, this is another question that's linked to the prior one, but you have all the information that you need. Okay. So if a customer is trying to return 2 of those mugs, how do we record this?
Should be sales returning amounts, right?
Sales returns and allowances, correct. Okay. And assuming that this customer paid with cash, we have to give them back their cash, right? Okay. So, how much am I going to be refunding this customer?
$20.
Because they're only returning 2 of them, which we sold them for originally $10 each. But then, if they're going to be returning it back to us, what do we need to do?
Put it back on the inventory.
we need to put it back into inventory. So in this case, coffee mugs. And what's going to be my credit account?
Cost of goods sold.
Yes, we have to undo that we sold these coffee mugs. Okay, so in this case, right, how much is my total cost of goods sold?
$6.74.
$6.74. Good. Okay. Excellent. So then that's it for chapter 7. Okay, so once again, dealing with purchase returns and sales returns, right? All of those is chapter 7, right? Because chapter 8 is when we deal with actually calculating every single thing. So in this case, right? Chapter 8, we're going to go ahead and use the following information and to answer the next 2 questions. So this one, I'm very specific, okay? Here's 2 things that you need to know. Here's all the information, right? You need to fill out the table here. And second thing is that your tracking and costing method is perpetual LIFO, okay? So last in are the first to go, all right? So in this case, let's go ahead and work this out one at a time. So on June 1st, if you purchase 100 toys costing $1 each, okay, and the freight cost you $25. So in this case, I'm going to go ahead and enter it in here, June 1st. I'm going to skip the middle, I'm going to skip right to the middle section. So I bought 100 toys at $1 each with the freight costing $25. So in this case, what's my purchase expense? $100 plus $25 of freight gives me a total cost of $125. All right. Now in this case, this is my only batch of inventory, right? And I'm using LIFO. So what is going to be my calculated cost per item for this batch? $1.25. Okay. Good. Now let's go ahead and see what happened next. Then on June 10, you purchase another 200 toys costing $1.25 with the freight costing you $50. So once again, June 10, we have 200 at $1.25 with the freight costing $50. So what's my purchase price here? $250 plus 50 gives you
300.
Which makes this batch right here how much per item?
$1.50.
$1.50. Good. All right. Now here on June 12th, you sold 200 toys at $5 each. Okay, no sales tax was charged. So in this case, I sold 200 units. Now, if I'm given, and I told you that this is LIFO, okay? So if this is LIFO on June 12th and I sold 200 units, what cost or which batch am I going to be taking out from?
150.
The one on the 10th, which is $1.50, which we know we're taking out that whole entire batch. So in this case, 200 times $1.50 should give you $300. And once again, if you want to show your work, you could say this right here. Okay. So that means this batch right here, you're going to get rid of. Okay. You got rid of that batch of 200. So now you're only left with 100 for $1.25. Okay. So then let's see what happened on June 15. We purchased another 300 units or 300 toys at $1.50. All right. And freight cost $75. So once again, it's June 15. We purchased 300 items at $1.50 with the freight costing $75. So therefore, what is my purchase price?
$4.50.
Mm-hmm. $4.50. Okay. Plus 75.
$5.25.
Okay, so in case this batch right here is gonna cost me $1.75 each. Okay. The last thing that we have here is on June 20th, you sold 250 units at $5 each with no sales tax. So in this case, I sold another 250 items on June 20th. So 250 items. Now, out of the two batches I have, the one for 125 and the one for 175, which batch am I going to be taking out from first? Or then in this case, which one am I going to be taking out? Which batch am I going to be taking out from?
The 300 batch.
Yes, so it's going to cost me $3.75. Now, let's calculate this. What's 250 times $1.75?
437.50.
437.50. So therefore, we're going to subtract 250 and take out 437.50. So in this case, right, if we did our calculations, we should have 50 remaining at a total cost of is it 87.50?
Yes.
Okay.
And
then
that's multiplying the 175 by the 50?
either that or you could just literally take 525 minus
Oh,
437.50. Okay, so that therefore we no longer have this batch either because it is now down to 50. So I'm just crossing it out so you guys know that this doesn't exist anymore. Okay, and that we have a new batch for the 50 items left. So then at the end of the day, on June 30th, you should have a total of 150 toys left on hand. So let's see, we have 100 from the first batch plus 50 from the remaining batch. So we do have 150 at the end of the day. And the total cost here, okay, what is 125 plus 87.50?
12.50.
12.50. Okay. And then here, right, let's also calculate the, calculate the total cost of goods sold. So 200 plus 250 gives you 450. 300 plus 437.50 gives you 737.50. Okay. So let's check out the questions. So question number 1 says, what is the total cost of your ending inventory? B, 212.50. Okay. And then question number 32 says, what is the total cost of your goods sold? In this case, we solved it right here to be 737.50. Okay. Any questions here? All right. If not, then we have one more inventory table to go through, so we don't need to go over the other one. We don't need to go over FIFO because it's the same thing except the way that you calculate it. However, I do want you to know for sure how to do perpetual moving average, because perpetual moving average is very different than the other ones that we've done in the past, okay? Or previously, right above, okay? So let's go ahead and just dive right into the very first one. So the very first one, we know for a fact that this is going to be the same, that we're still going to be purchasing 100 toys at $1 each, with the freight costing $25 to give you this very first line right here. So this is going to be the same, right? However, let's go ahead and talk about what happens next. So here on June 10, you purchase a total of 200 toys costing $1.25 with a freight of 50. Okay, so June 10, we have 200 here for $1.25 each with the freight costing 50. So in this case, just like how we solved from above, we know that this is going to be 250 plus 50 gives you 300. Now, this is moving average, okay? Do I need to calculate my cost per item here for this second batch?
No.
No, I don't. Because in this case, I don't care about that because we don't care about batches. What we have to do is now we need to get our totals for our inventory. So again, moving average, right? What's my total quantity here? You have 300. All right. What's 125 plus 300?
425.
425. Now we need to find our average cost per item because in this case, right, I'm taking a total of $425 and I'm dividing it by a total of quantity of 300 to get my average cost per item. So what's my average cost per item here?
I got 1.4166666667.
Okay. 1.41666 is okay.
It's 7 sixes.
It's okay. Just keep that in your calculator.
Okay.
So now we have that, right? Let's go ahead and see what happened in the next scenario, right? So the next scenario says that June 12th rolls around and you sold 200 units. So June 12th, you sold 200 units at $1.4166. Okay, that's all I can fit right there. So in here, keep that in your calculator and now times it by 200. And how much is your total cost of goods sold here?
And I need to round in this one, right?
Round to the yes.
Okay. So it's 283.33.
283.
No, 34. I'm sorry.
2. Say again. 8334.
Mm-hmm.
Okay. It's not 3333.
I got 283.32.
It's 23.33333334.
Okay.
So hold on.
Yeah, probably.
450. Oh, my bad. So in this case, 33333 does not tell you to round up because the digit after that is a 3. So 3 doesn't tell you to round up. It just tells you to keep it the way it
It's
is.
just 33.
So just 3333. Okay. So now we can subtract that out. So 200 minus 28333. So therefore, I should get a total remaining of 100 items, okay, at a total of 14167. Is that right?
Yes.
Okay.
Yes.
Okay. So then let's see what happened next. Then on June 15, you purchase an additional 300 units at $1.50 with the freight costing 75. So here you go, June 15. We purchased 300 units at $1.50 with the freight costing 75. So as we know here, this should be 450 and this should be 525. Okay, so let's go ahead and add those totals up together. So we have a total of 400 items at a total cost of now six, 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 seven. I think so. 666, yeah. So then what is now my average cost per item?
I got 1.666675.
1.666675. There should be 4 sixes. 1, 2, 3. Yes. Okay. All right. So then last piece of information here is going to be June 20th, you sold additional 250 units. So here, June 20th, we sold 250 at $1.6666. Okay. So then what is my total cost of goods sold here if I sold 250 units?
For 1667.
416.67. Okay, so then we can subtract that out. 250 minus 41667. So therefore, right, we should have so what's 450? I'm sorry, 400 minus 250 should give you 150 remaining. All right, what is 66667 minus 41667? Okay, that should give you 25000. Here should give you 450. And this should be 0, 0. 3 plus 6 is 9 plus the carryover is 0. 8 plus 9 plus a carryover gives you 0. 7. 0, 0. This should be 700 right here. Okay. So let's go ahead and take a look at the questions. Number 33. What is your total cost of goods sold? I'm sorry. What is your total ending inventory? Boom. B. 250. Okay. And then we get what is your total cost of ending of your cost of goods sold? Boom. 700. Okay. So once again, unless I specify in the example to either round at the nearest fourth penny, whatever it is, then you round. But in this case, I told you I didn't say anything about rounding. So by not rounding, you end up getting an equal answer at the end of the day. So make sure you pay attention whether you need to round or not, because you may or may not come to a conflict when you're looking at your answers. But in most cases, I try to make the questions in the exam easy numbers. Okay, so there we have it. That was chapter 8. So we have one more hour to go ahead and go over chapter 9, 10, and 11. So let's quickly dive right in. Number 9, use the following information to answer the next question. So here on January 15, you establish a petty cash fund for $500. By the end of January 31st, you counted all of your receipts, and here they are. So you got a birthday cake, you got a pizza, you got office supplies, and you got postage stamps. Okay, so $19.99 for the birthday cake, $23.78 for pizza, $6.02 for office supplies, and $10.75 for postage. So, question number 35 asks, for what amount do you need to write a check for to replenish the petty cash fund?
B. 6054.
6054, right? All we have to do is add up our total receipts. So if you added up your $19.99 plus your 23, all those 4 numbers right there, you see 9 plus 8 is 7, 9, 10, 7, 9 plus 5 gives you 5. Wait, what? 9 plus 8 is 17, plus 2 gives you 19. Okay, plus 5, it gives you 4. So your ending number here is 4. So 60, 54. Okay, you just add them all up, and that's how much you replenish the petty cash fund for. Okay. Number 36. Okay, how do you establish a petty cash fund?
It's going to be A.
A, you debit the petty cash fund and credit checking. Yes, right? Because again, your petty cash fund is a separate entity, but it acts as if it's like a small little bank account. So you're going to be crediting your checking because you need to take cash out from the bank and put it into a petty cash fund. Okay. Number 37, okay? How do you replenish a petty cash fund?
B.
B, you're going to write a check for all the total amount of receipts in your petty cash fund. Good. All right, chapter 10 now. So that's it. That's all I'm going to ask you for chapter 9. The most I'll ask you is probably 1 or 2 questions. Either how do you establish petty cash fund, and 2, to calculate how to replenish a petty cash fund. So there you go. Okay. Number 38, okay, under which method does the IRS use to write off bad debt expense for tax purposes only?
Is it B?
Which one?
B.
Not the bad debt expense. direct write-off method. Correct. Okay. So did you say C or did you say B, as in boy?
Now I was doubting between B and C, but at first I say B.
Okay, good. So so you got this the second time around. It is the direct write-off method, right? When we're talking about writing off bad debt, you have two methods, right? You have the direct write-off and the allowance method. The account that you're going to be using is the bad debt expense. Okay. Good. Number 39, okay? A company estimates that 34,887 of its 500,000 accounts receivables are to be uncollectible. There is currently a debit balance of $5,000 in the allowance for doubtful accounts. Okay? The adjustment entry will be
39,887.
okay, so remember in this case it's going to be bad. This is where the bad debt expense comes from, right? And this is also going to be the allowance for doubtful accounts. And in this case, right, we have three key factors, right? We have our estimate of 34,887, and we have the key word here is accounts receivable. So therefore, we have to care about what is in the balance of the allowance. In this case, we currently have a debit balance, which tells you that you have to add. So 5,000 plus the 34 gives you 39,887. Okay, 39,887. And this is 39,887. So once again, a company estimates that $34,887 of its 500,000 total credit sales is to be uncollectible. Okay, there's currently a credit balance of $5,000 in the allowance for doubtful accounts. The adjustment entry will be
A.
A. 34,887. Right, that is correct because in this case, we recognize the keyword total credit sales. So in this case, we don't care about the balance in the allowance for doubtful accounts. We only care about what the total estimated amount is for, which in this case is 34,887. So A is the correct answer. Okay. Again, a company estimates that 34,887 of its 500,000 accounts receivable is to be uncollectible. Okay, there is currently a credit balance of 5,000 in the allowance for doubtful accounts. So your estimate is going to be, the adjusted entry will be
C.
C, 29,887. So in this case, right, keyword here is accounts receivable, and a second keyword here is credit balance. So in this case, we need to subtract the 5,000 from the 34, which gives you 29,887. Okay, 29,887, which is letter C. Okay. Last but not least, I'm going to test you one more time. The company estimates that 34,887 of its 500,000 total credit sales is to be uncollectible. There is currently a debit balance of $5,000 in the allowance for doubtful accounts. The adjustment entry will be, once again, we see the words total credit sales. So in this case, do we care about what balance there is in the allowance for doubtful accounts?
No.
No. So our answer is going to be 34,887. Okay. So once again, this is a good example that you can use to keep practicing over and over again, okay? Because here, the quickest way to get the answer is just to memorize those little key terms. Okay. All right, here we have an example of a bank reconciliation. So here's a bank statement. Down below that is going to be your cash/check register. Okay. Hold on, I need to bring this up. There you go. So once again, you have your bank statement here. You have your cash ledger/check register here. And you have your deposit slips here as well as your check register, which I just said that. You have your cash register and your check register. Cash ledger, check register. Oh, okay. So here's your bank reconciliation, all right? First things first is, which side do you want to work on? You want to work on the bank side or the cash side?
Let's go with the bank side.
All right, so first thing I'm going to start off is, what is your ending balance in your bank account? So let's take a look at my bank statement. Okay. What does it tell me my ending balance is as of August 31st?
The 1088.
1088. So I'm going to plug that number into my table here. 1088 is what my ending balance is. Okay. On my bank side, what do I need to add on my bank side? What does the bank not know that I know?
That you may have checks still out.
Okay, that's going to be a part of it, but what am I going to be adding first?
I don't know.
Okay.
Deposits in transit.
Deposits in transit, right? For your bank side, you have dues, right? DO. First thing you're going to add is your deposits, and then you're going to subtract your outstanding checks. Okay? DO. So in this case, we're going to add our deposits. So let's take a look at my deposits. How many deposits do I actually have on my books? How many have I recorded? 1, 2, 3, 4, and 5. And let's take a look at our bank statement. Which deposits actually cleared? Okay. I see only 4 deposits actually cleared. Okay. Now the last deposit I see was $126. So let's take a look at on my books, right? I did deposit $126, but here's the one I haven't done yet. The one that hasn't cleared yet was my $483. So that's going to be added to my deposits, is going to be $483. Okay. And I'm going to say this was the deposit on 8/31. Okay. Now, here is I need to subtract my outstanding checks. So let's take a look at my check register to see how many checks I've written in grand total and then compare it to my bank statement. So here I wrote check number 301, 302, 303, 304, 305, 306, 307, 308. Okay. So now let's take a look at my bank statement. How many of them actually cleared?
What, 5?
5. Which one is missing?
4, 6. Um, Let me see. One, two, three, four. Number six.
6.
306.
Okay, 306 is missing. What else is missing?
Mm, Was
308.
no. Well, six. 306. One, two, three, four, five. Oh, and 307.
306 and 307 because the next one that
Yeah.
cleared was 308. So here, let's take a look. 306 and 307. So check number 306 was for $314. My check for number 307 was for $54. Okay. So I'm going to go ahead and put that in here that I had check number 306 and I had check number 307. So in case this was 314 plus $54. So in this case, how much do I need to subtract? So 314 plus 54 is 8.
368.
368. Okay. So now let's go ahead and find my adjusted balance here. If I started with 1088, I need to add 483 and subtract out 368. What is my grand total of adjusted balance?
I mean, before we jump into that one, but what happened to the 308 non-sufficient fund?
Okay, so in this case, it's just flagged that it was an NSF. However, they pushed it forward. So this one just basically tells you why you got charged for the NSF fee.
Okay, so
Okay.
but they don't process it.
Yes. Mm-hmm. The check didn't bounce or get refunded because under my fees, it didn't show that the check went back or it got bounced or there was a return check fee. In this case, they only charged me for the NSF and they just pushed it forward. As in, like, they already paid for it. Now all I'm responsible is to just pay back whatever the money that they paid for me, and I got charged because I didn't have enough money in my bank. So that's just all that this says right here. It's just flagging that this check right here is the reason why you have an NSF charge. Okay. All right. So what's my total adjusted balance here?
I got 1939. I may be wrong.
1939.
Yeah, because I added the 188. I'm sorry, the 1088 plus the 483, which came to 1571, and then 1571 minus the 368. Oh, 1203.
1203. Okay. Good.
Yeah.
Now let's go ahead and confirm that this number is correct. This is my correct adjusted number. So now on the check ledger side, right? What is my ending balance in my check ledger? So here you go, cash ledger. What's my ending balance as of August 31st?
The 1153.
1153. 1153. Okay. Now on the cash side, what do I need to add and what do I need to subtract on the cash side? Because that's what we have to do. What does the bank know that they charged me for that I don't know that I need to update my books for?
The service fee $50.
The service fee, okay, that's going to be subtracted because they take that away from my bank account, right?
Right.
Okay, what else?
You said, what does the bank know that the customer doesn't know, that you as the customer doesn't know?
Yes.
Is that what that's your question?
Mm-hmm.
So the bank automatically paid, charged the $50 for the non-sufficient fund, right? And you're saying that they did something else that the customer doesn't know?
Hmm.
And what is it? Hmm. I don't know. What else did the bank do that the customer? I don't know. I don't
Okay.
know.
So
Is it the
let's.
ACH and the interest?
That is correct. So let me go ahead. Service charge was $100 and the NSF charge was 50. Let me go ahead and plug that in real quick. Um, so the bank, they charged you this, right? They charged you this without you knowing. So in this case, this is going to go against your cash because they already charged it off your account. Now, here's things that the bank can collect for you as well, but you don't know how much you
Where,
collected. And that
where
would
did the $100 service fee come from? I didn't see that.
your bank statement says right here that your service charge was
NSF
$100.
fee and the $100. Oh, so that's the answer. What else did they charge? The service fee and the non-sufficient fund fee.
Yes.
That's the answer. Okay.
That's just the answer for the bottom section for the subtracting portion. Now, the bank, you can also tell the bank to collect money for you as well. And that's what an auto clearinghouse is, as well as interest, because if you set up your bank account to accept online payments, you're accepting finance charges, right? Because when you set up that bank account and you're having your customers pay on a monthly basis, right? You're collecting interest off of the customers. So that's exactly what interest is right here. You're collecting this money from your customers. The ACH is when you charge your customers additional. For example, if they don't use their bank card and they use a credit card, you can charge them an additional service fee for them for using the convenience of a credit card. Because once again, we talked about briefly about how credit cards work is that you have to pay the credit card services to collect the money for you. In this case, you're charging an additional on top of that saying, hey, I'm going to charge you additional $2.50 for using a credit card for the convenience instead of using your bank card, which bank cards are debit cards or checking accounts. They're normally always free. But if you're using a credit card, it's a convenience charge. Okay, so that's what an ACH and an interest does. Now, in this case, if you're not keeping track of your customer payments, this right here, the bank tells you, well, this is how much interest and this is how much auto clearinghouse you've collected. And that is something that the bank knows that you don't know. Okay, because they're collecting money on behalf of you. So this is something that you don't know that you need to update your books for because you manage the bank to collect money from your customers through online payments. And therefore, any person that has an account with us at finances, you get to charge them interest on top of that. So therefore, this is the interest that we are collecting. So in here, auto clearinghouse is 125 and interest is 75. So interest is $75 and auto clearinghouse is 125. So therefore, I need to add $200 to my bank account because that is money that I've earned. Okay? So if I started with 1153 and I added $200 worth of interest in auto clearinghouse, but I had to subtract $150 worth of service charge and NSF fees, my ending adjusted balance is what?
1503. Am I wrong?
Try calculating that again.
Okay. 1153 plus the 200 plus, and then the minus the 150. 1503.
Try calculating that one more time.
Okay, 1153 and 200, that would be 11. I'm sorry, that'd be 1353. And then minus from the 1353 minus the 150, 1203.
There you go.
You don't know what I was doing.
Okay. 12 of 3. You were adding the service charges. You were adding the service charges. This is something that's subtracting from your bank account. So in this case,
Oh, okay.
1203. 1203 is the answer. So here you go. C 1203. Okay. Okay. Good. Question 44. So question 44 is going to be you bought a bank bond worth $200,000, okay? And the annual simple interest rate is going to be 7.75%. And here it says that it can be redeemable at the end of at any time. Excuse me, sorry. How much will the bank bond be worth in 10 years? So in this case, I have $200,000. The interest rate, simple interest, is 7.75%, and I have it for 10 years. So in this case, the question is asking, how much is the bond going to be worth in 10 years? So in this case, I need to solve for the simple interest, but the question is asking for the future value. It's asking you, what is the bond going to be worth in 10 years? So
I got A.
A, 155,000. Okay, so explain to me, how did you get?
Okay, I calculated the I calculated the 200,000 by 7.75%, which gave me 15,500, and then I multiplied the 15,500 by 10 years, which gave me the 155,000.
Okay, that's how much interest you collected.
Wow.
What was the question asking?
How much interest did you collect over a 10-year period?
Let's read the question again.
You bought a bank bond worth 200,000. Its annual simple interest rate is 7.75%. And can be, what is that? Can you
Redeemable.
move that little symbol right there? What is that? What is it?
Redeemable.
Okay,
Redeemable.
redeemable at any time. How much will the bond be worth in 10 years?
So what is the
So
question asking?
every year, the bond, how much will it be worth in 10 years? That's the question, right?
Yes. That's the question. How much is the bond going to be worth in 10 years? So am I asking for interest collected, or am I asking for future value?
Oh, the actual bond itself. Oh, okay. So you're asking, how much would the actual bond be in 10 years at
Correct.
7.75% interest?
Correct.
So is your bottom line that I'm calculating it wrong?
No, you are calculating correctly, but you're not answering the question correctly.
Hmm.
So you
I'm not
calculate
surprised.
you answered the interest correct. Now what's the formula for future value?
I don't know. Can you repeat it? What is it?
Principal plus interest.
Principal plus interest. So therefore, what is 200,000 plus 155?
355.
355,000. So your answer here is what? Your
C.
answer is C. So be careful of the question that it's asking. Okay. So in this case, I'm going to actually not have you guys do question 45 just for time's sakes, and plus that's not going to be on the exam anyway. So we could just skip over that one. All right, so remember, you have to read the question carefully. In this case, it's not asking you how much interest is going to be collected. It's asking you for what the bank bond is going to be worth in 10 years. So it's asking for future value. I will be asking that question on the exam. I can ask you both questions. One, how much interest is collected? Second one is going to be how much is the bond going to be worth in X amount of years. So make sure that you are careful to read it because I can trick you by adding all the answers as much as possible. So I could have a question that's asking you what the bank bond is worth with both answers of the interest collected and how much it's worth in 10 years. Okay? So make sure you read carefully. Okay?
Yeah, to be honest, most of your questions are very tricky.
Yeah, all your questions are very tricky.
I second that.
Okay? That's because the whole purpose of accounting is for you to analyze.
Yeah, but it leaves us so confused.
That's why I have this study guide for you guys to help you guys answer the questions on the exam. So it's all about practice, reading the questions, and making sure you answer the correct question. So in this case, that was a pretty straightforward question. The question was asking how much the bond was worth, not how much interest was collected. Okay. So, anyways, continuing on. Now we are moving into chapter 11. Okay. So, question number 46 says, what fixed asset can never be depreciated?
B.
That's land.
B, land. Okay. Number 47, right? Fixed assets are depreciated, then intangible assets are
A.
A, amortized, right? Oop. Okay, there you go. It is. It is. Okay, okay. Number 48, okay? If a machine was put into service as of January 19, when do you actually start depreciating it?
C. February.
C, February. Okay. Number 49, gap determines what two components for depreciation. So in this case, I'm being very specific in two components.
Yeah, that'll be D.
D, C and B and C only because estimated useful life and salvage value is what we taught in chapter 11. Has nothing to do with partial years. Okay? So this one is asking for that one. Okay? Number 50, okay? What are the three depreciation methods?
D.
Yes. Okay, straight line, double declining, and units of production. All right. Number 51, under the double declining method. Okay, at the end, book value must be equal to
I would say C.
C. That's correct. Salvage value, right? If you guys remember, when we do the double declining depreciation, right, we are always depreciating it twice as much. So our end goal is if we have a set salvage value, it cannot fall below it. It must be equal to salvage value. Okay. All right. So use the following table to answer the next two questions. So let's take a look here. The given information here, we bought a computer. The depreciation method is straight line. Estimated useful life is 5 years. The asset cost is $2,500. and the salvage value is $0, and the date that you place into service is January 5th. Okay, so assuming that we are calculating depreciation every year, okay, so let's solve for the depreciation basis. What's going to be the depreciation basis?
Cost minus salvage.
Cost minus salvage. In this case, we got 2,500 minus 0. So my depreciation basis is going to be
2,500.
2,500. Good. Now, what's my depreciation rate going to be?
$0.20.
Good. 1 divided by 5, which should give you 0.20. Okay, 20%. Okay. So in this case, right, what is going to be my depreciation expense? $500. So therefore, my first year's accumulated depreciation is going to be 500. However, what's my book value going to be on the first year?
$2,000.
$2,000, right? You're going to take your asset cost minus accumulated depreciation to give you 2,000. Okay? What about year 2? Since we'll just finish off the table. What about year 2? What's my depreciation basis going to be?
Same.
The same. So it's going to be 2,500. What about my rate?
Right, it's the same also.
It's also going to be the same. And what about my depreciation expense?
Same.
It will also be the same. So in this case, my accumulated depreciation for year 2 is going to be
1,000.
1,000. Okay, right? 500 from the previous year plus additional 500 gives you 1,000. So therefore, what's going to be my book value for year 2? Sorry, 1,500. Good. Right. So now let's go ahead and answer the question. 52 asks, what is the depreciation expense for year 1 and year 2? We know it to be C, 500. So then question number 53 asks, what is the book value for year 2?
B.
1,500. Good. Okay. All right. So then that's pretty much what I'm going to be asking you is a small table like this. I'm going to ask you to depreciate for year 1 and year 2. And then I'm going to have you guys pretty much fill out the whole table. And I could ask you questions whether it's about the depreciation expense or it could be about the book value. Okay. So that was that one. So next example we have here is going to be the same exact example, except this time it's a printer, and we're using we're going to be using the depreciation method of units of production. So here the number of units that it could produce is 10,000 pages. And the asset cost is $500, salvage value 0, and the date that you place into service is January 2nd. Okay. So once again, I've given you the units that were produced that year. Okay, so in this case, what's going to be my depreciation basis?
$500.
It's going to be 500 because in this case, right, my formula is going to be the asset cost minus my salvage value, which in this case, 500 minus 0 gives you 500. Okay, what's my per unit rate going to be?
It's a 0.05.
0.05. How did you get that answer? So you're going to take your 500.
The depreciation basis
Mhm.
divided by the estimated units produced.
Good. So 500 divided by 10,000 pages is going to get you, do you say 0.05?
Yes.
Perfect. Okay. So then, what is going to be my depreciation expense for the first year? If I've printed a total 2,500 pages for the first year, what's my depreciation expense going to be?
Is that correct? 125?
125. Okay. So therefore, that's going to bring your book value to be 375. 500 minus 125 gives you 375. All right. Let's go ahead and continue filling this out. So what's my depreciation basis going to be for year 2?
Same 500.
It's going to stay the same, 500. What about my rate?
Stays the same also.
Yeah, this is also going to be the same. Now, the difference is going to be in my depreciation expense. In this case, I only printed 2,000 pages for year 2. So what's my depreciation expense going to be?
$100.
It's going to be $100. Okay? So therefore, what's my accumulated depreciation?
$225.
225, which then is going to make my book value is going to be for year 2.
$275.
275? 370, what did you say? 275.
$275.
Good. All right. So now let's go ahead and answer the questions, okay? Question number 54 asks, what is the depreciation expense for the first year? Here we go. Year 1 was indeed 125. Okay. And the next question here for 55 asks, what is the book value for year 2? So in this case, how much was my what?
Letter C, 275.
275. Good. Okay. Last but not least, the last 2 questions are going to be revolved around double declining. Okay, so in this case, we have a computer once again. The depreciation method is double declining. Its estimated useful life is 5 years. Its asset cost is 2,500. Salvage value is 0, and the date that we place in the service once again is January 5th. Okay. So in this case, what's going to be my depreciation basis for year 1?
1 over 5 times 2. Depreciation basis is the what?
Beginning of the year's book value.
2,500.
It's going to be whatever your asset cost is at this point. It's the first year because that's how much you purchased it for. 2,500. Okay. So then what's my depreciation rate going to be?
Would it be 0.4?
Because it's going to be 1 over 5 times 2, which gives you 0.4. Okay. So in this case, what's going to be my depreciation expense for year one?
$1,000.
It's going to be $1,000, right? Because it's going to be 40% of my 2,500, which is $1,000. Okay, so there you go. Accumulated depreciation for the first year should be the same. So therefore, what's going to be my book value as of year one?
Would be 1,500.
1,500. So then, if I know that my book value for year one, at the end of year one, is 1,500, what's going to be my depreciation basis for the second year?
600. Oh, your depreciation base for the second year is 1,500.
1,500, right?
And
The
the rate stays the same,
rate stays the same.
and then it's 600.
600. Okay, so then that gives you a total of 1,600, which then now, what is your grand total for your book value for year two? It should be like 9,000, I think. Right? 25 minus 16 is 9,000.
2,500.
2,500 minus 1,600. Oh, it's 900.
I know, I'm like,
My bad. Okay, all right. I added way too many zeros. Okay, 900. Okay. So then question number 56 says, question number 56 says, what is the depreciation expense for the first year? Okay. 1,000. Okay. And then question number 57 says, what is the book value for year two? Which we just solved right there. My mistake. It is 900. Okay. All right. We completed the entire study guide. So this is what you are expected to know on the exam. Okay. As far as that, like I mentioned before, it's not the exact exam. I'm not gonna have you take two exams of the same exact material, but this is similar. This is a study guide, so you kind of guide yourself to what you are expected for the exam. So as mentioned before, you have everything on the Google Classroom that you can use for this class. I'm going to be posting the answers to the study guide in the study materials section.